Well, welcome everyone to our tax webinar, Home-Based Business. My name is M. Elaine Atkins. I'm a tax preparer, and I'm also IRS PTIN certified. Basically, what that means is I have my own preparer tax ID number through the IRS, and that's part of my certification. I have to take that course every year to be certified as a tax preparer on behalf of the IRS. So without further ado, I'm going to go ahead and get started. Again, please ask your questions by using the chat, and I can also unmute the line. So at this time, I'm going to unmute the lines. If it gets a little noisy, I will mute all lines back. But I want this to be an interactive session, so feel free and ask any questions you may have. So, what are your largest household expenses? Anyone can tell me what are your largest household expenses?
Utilities.
Utilities? Anything else? Have our house, right? Our apartment. What about health care? What about food? Mortgage? Okay, I see you, Naisha. What about transportation? There's utilities. So these are our top largest household expenses. So there are some others. One in particular that we may not have thought about is our taxes, right? So taxes is actually our largest household expenses. Almost half of our income is spent in taxes. Again, before we go any further, can everyone hear me okay?
Yes, I can.
Okay. I have all lines unmuted, so try *6 to see if you can hear. Okay. So as you can see on the screen, almost half of your income is spent in taxes, whether it's sales taxes or property, federal and state, Social Security, Medicare, and there's others as well. So we don't want to look like this lady on this screen, right? Or even this gentleman. On this screen. Don't want to look like him during tax season, right? So I found this little picture on the internet. It says, I tried paying my taxes with a smile. They wanted money. So, again, we want to make sure we have that money to pay for our taxes, right? But we want to pay our fair share. So what are your options? Get a second or third job? We don't want to do that, right? What about borrow money? What about change your lifestyle by cutting back? We don't want to do any of those things, right? So here are some options. So franchise your own home-based travel business. The IRS says run your business with the intent to make a profit. How do you do that? Operate on a regular and consistent basis, as little as 2 to 3 hours per week. You don't have to make a profit. It's the intent that will do in the eyes of the IRS. So here's some tax benefits. So there's hundreds of tax write-offs for businesses, all 100% legal. There's no cap on how much you can earn, and it can make a huge impact on your tax bill. So as an employee, we receive some possible credits and deductions for individuals. It depends on, what do you have. There's only a few as an employee that you receive. So it depends. Do you have children that you can claim? So for every child that you're claiming that you take care of, you receive an exemption for them, which is called an individual exemption, which means you also provide more than half of their care. Another option is credit for child and dependent care expenses. That's if that child is under a certain age and you have to pay daycare or child care while you're away at work. So you can possibly earn that credit. Another credit is education credits. You decide to continue your education, you decide to go back to school, you take some classes. So you can possibly receive some credits for going back to school. Retirement savings. So you decide to put some money up while you're working on your job, those retirement plans. So those are some possible ways of having some savings on your tax liability as well. Then you have the additional child tax credit. That's in addition to another credit that the IRS allows you to have depending on the children that you're claiming. Then you have your health care, individual responsibility. That's the Obamacare. So if you have, or even your health care with your employer. So if you have health insurance, you receive a credit for having health insurance. If you don't have health insurance, you could be penalized for not having health insurance. It just depends on your situation. So those are a few. If you just, as an employee, you work for someone, you receive a W-2. So you're a wage earner. Some more tax benefits. As a business owner, you will receive the employee possible credits and deductions that we just talked about. And then there are some others that you can receive as a business owner, such as your vehicle. So once you become a business owner, you can take advantage of writing off some deductions related to your vehicle, like parking fees, tolls, property taxes, mileage, and or actual expenses on your gas, oil, tires, repairs, maintenance, even car washes, getting your car clean. Then you also have advertising. So you want to advertise your business. You want to get that information out there, letting them know, hey, I have my own business. I can be of service to you. Meals and entertainment. So you go out and you talk to potential clients and you talk over a meal, or you go into a show to entertain. Those are also could be tax deductions as well related to your business. Contract expenses, where you're contracting out some work that needs to be done related to your business. One in particular could be you have a child that's helping you pass out flyers related to your business, or setting up your home for private business receptions or business opportunity meetings. So those are some different ways of contracting out expenses where you're actually paying someone to help you with your business. So you want to be able to write that off. And how do you do that? You have an agreement in a contract form, whether you pay them in cash, you give them a receipt, or you use your business transaction cards. It's up to you. But you definitely want to make sure you have something in writing to support those contract expenses. Home office and travel, those are key. Having a home-based business, you definitely want to be able to write off as many things as you can related to your business because your business is based out of your home. So we'll spend a little bit more time on that in a few more slides, as well as travel. So the home business expenses. So it's no longer confined to one room in your house. So say, for instance, you have an office with actual office furniture, you have your computer, your printer, you have all those things designated in that one room. However, sometimes you don't want to be in that room all the time. Maybe you have another room in your home and you want to use your laptop in that space. Well, if you're using that space regularly and consistently, then you are able to write off that space as well as that designated office space. So it's no longer confined to one room in your house. All general household bills are now a business expense. Basically what that means, again, your business based out of your home. So that means whatever it takes to run your home, the lights, your rent, your mortgage, your cable, gas, whatever those regular recurring household bills it takes to manage your home now becomes a business expense. So an example of that would be, say, for instance, your home is 2,800 square feet is the total home space. And you designate 1,120 square feet as office space. So you go through your home and you find, okay, in this room, this is the area that I use for my business. This room, this is the area I use. And you add up that square footage. Based on that square footage against the overall square footage of your home, it's the percentage that you will use for your business expense. So in this example, this one came out to 40% of business use. So every month that your mortgage or your rent is paid, you're going to write off 40% of that. So 40% of your mortgage interest or your rent, 40% of your real estate tax, property tax, homeowners, renters insurance. If you have home warranty on your home where, your appliances or something may go out, you get to write off that percentage of that as well. So that's where the maintenance come into play. Your insurance, your utilities, your internet, your alarm system, your cable, house cleaning. You need to have your house cleaned. You're going to have an event coming up, like I said, a private business reception in your home. You need to have your house cleaned, right? So you can write that off. Your yard work, because you don't want someone walking up to your home and, your grass is just knee high. It doesn't look presentable, right? And you're trying to promote your business and your services to potential clients. So you want to be presentable yourself as well as your home. So you're able to write off house cleaning, some yard cleaning, gas, water, electricity. Okay? And just a little side note there is just basically saying that when your home office expenses are greater than your business income, your deduction will be limited. So it's all about the overall income and expenses that you have. So basically what that note means, if your home office expenses is greater than the income that you made from your business, you won't be able to deduct all of those home office expenses. Any questions on what we've covered so far? Okay. Okay, so things that you can write off at 100% for your business. You have office furniture, office supplies, desk, chair, filing cabinets, pens, writing pads, printing, books. So you have an office space. Say you decide you want to make one of your bedrooms a designated office. So when your clients come over, you're definitely going into that office, right? So you want to go out to Staples or Office Depot and purchase furniture. Well, whatever that furniture costs you, that desk, that chair, the equipment that you buy for your office, whatever it costs you, if it's $980 plus sales tax, well, you get to write off that $980 plus the sales tax. So that's 100% tax write-off. So that's basically what that means, is that these particular items, you get to write off the sales tax included. So if you're buying printers, scanners, anything related to your business, you get to write that off. Again, we talked about advertising, but again, like purchasing your business cards. Say you purchase your business cards offline, they charge you shipping costs. Well, you get to write off the business cards and the shipping costs. Online ads, your hosting fees. So like, for instance, with hosting fees, if you ordered a domain from GoDaddy.com or some of these online websites, or you pay someone to build your website, whatever they charge you at 100% is a tax write-off. So if they charge you $300, you're writing off $300. Those business cards cost you $250, then you write off $250. Your operating expense to run your business, whatever that franchise fee is. So I know some businesses, their franchise fee costs them $79.95 to run their business online. So you get to write off that $79.95 every month because that's your operating expense. You're entitled to that tax write-off. Cell phone. Put your cell phone number on your business cards. Talk business on your calls when you answer your phone. So basically, you get to write those off as well. Some people use their personal cell phone to conduct business. You would treat that as well, similar to the percentage of your home. So say, for instance, you're talking on your cell phone 50% of the time about your business, then you would write off 50% of your phone. Now, if you want to buy a second line and dedicate that second line to your business, then you write off 100% of that designated line. So, like, there's some business tools out there that are called Flex. You can purchase a Flex line for $9.50 and have that connected to your regular personal cell phone, but you get to write off that $9.50 to pay for that designated business line. So those are some options that you can do. Again, if it's one cell phone and one line and it's for personal and business, then you want to stick around to a percentage and be reasonable about it. You can pull your cell phone statement to see what calls you're making and then go through those lines and see, okay, I'm really spending 75% of the time talking business and 25% talking personal. So that will be your options. And again, you have the option to buy additional line and designate that line. And again, there's another tool that called the Flex. You can purchase a line and have it forwarded to your cell phone. So any questions about that? Oh, I have one more. There's computers. So you can buy laptops, printers, shredders, scanners, TV, DVD players, fax machines, tablets, iPads. So, for instance, for me, I know for the printer, I like the big work scanners that comes, it's like all in one. It's a heavy duty. It has the fax line attached to it, has a scanner. I can print. I can do a lot of different things with it, and it's pretty expensive. Going forward, I try to spend $400 or $500 on those type of equipment so I can write off that same $400 and $500 on my taxes, because again, it's 100% tax write-off. So whatever it costs me, sales tax included, is a tax write-off. So any questions on the 100% tax write-off for business? Any questions? Okay. All right, so travel expenses. For tax purposes, travel expenses are the ordinary and necessary expenses of traveling away from home for your business, profession, or job. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your business. An expense does not have to be required to be considered necessary. So basically what all that means is that for the travel expenses, like, what's your business? Anyone? What's your business? Anyone online have a business?
Travel.
Okay, travel. Okay, so you franchise your own travel business, right?
Mhm.
Okay, so what's your profession? Travel consultant, right?
Right.
And then your job is to do what?
Consult travel.
Book travel. Book travel is your job. Manage travel requirements made for business or holiday, provide tourism related to services and package tours, network with tour operators, participate in one of the fastest growing home-based business travel compensation marketing programs. That's your job, right? So at the end of the day, every time you leave home could be a potential business expense. How's that for your business? Some other travel expenses. This chart summarizes expenses you can deduct when you travel away from home for business purposes. So, for instance, I'm not going to read all of these, but if you have expenses for transportation, then you can deduct the cost of travel by airplane, train, bus, or car between your home and your business destination, right? What about taxi or the commuter bus, airport limousine? So whatever those costs are, so now we have what? Uber and Lyft, right? So call Lyft, call Uber. You get to write that off. So it's your job to travel. Baggage and shipping, you need to send some things over to your designated business location prior to you going. You get to write that off. And again, we talked about lodging and meals. So when you're out, again, your business is based out of your home. So once you leave home, if you need to get a hotel or have meals for your overnight trips or your business trips, guess what? That's a tax write-off. Cleaning, dry cleaning. You have suits, right? So you have to, dress the part for your business because you're the CEO of your own business. So you want to have those nice suits and get them clean. So that's a tax write-off. When you're out and about with your meals and entertainment, if you have to tip, guess what? That's a tax write-off. Or even, like I said, with your taxis or the Lyft or Uber, and you leave a tip, that's a tax write-off. Some other similar ordinary and necessary expenses related to your business, a good one is ATM fees. Sometimes you have to use cash, or if you're transferring money or getting money out of an ATM that's not your ATM and they charge you a fee, you get to write that off because that's a business expense. You needed that income, you needed that cash, but the machine is charging you to get your money out. And it's that once you take that money out and it's for a business expense, you get it right off that ATM fee. So any questions on the travel expenses? Okay, so some other information. We want to keep good records for our business, get a good set of ledgers or a mobile app, get receipts for everything you possibly can. If you have no receipts, keep a diary, make notes about your expenses. Okay? Set up a good filing system and keep your records for at least 3 years from the date you file your tax return. Now, another option is the Deductar. This is another business tool that we use that is out there, that is available. So you want to also seek a tax professional who prepares your income tax return forms for individuals and small businesses, reviews your financial records such as prior tax return forms, income statements. Also, a tax professional would be able to consult the tax law book or bulletins to determine procedure for preparing your tax return. And just a little disclaimer, I do not work for the Deductar and will not earn a commission for suggesting this tool, but this is a really good tool to have because it will automate your income and your expenses, where if you're pretty savvy, you can prepare your own tax return, or you can have it already prepared and formalized to a point where all you would do is click one button and send your information to your tax professional. And just to show you a little clip on how this tool actually works, I'm just going to play a little short video on this.
As an independent business owner, your CPA can be one of your most important business partners. The problem is, the quality of their work is only as good as the information you give them. That's why government estimates tell us that 7 out of 9 tax returns miss critical deductions. And other studies show that taxpayers overpay by more than $1 billion each year in the U.S. alone. So how much of that money was yours? Now, imagine that you had your CPA with you 24/7, tracking your mileage, noting expenses on meals and meetings, and updating you real time on your tax savings. With Deductor, that's just what you got, on the go, anytime and anywhere. As soon as you set up your account, Deductor goes to work, prompting you to enter expenses and income, time, mileage, and more. Make a purchase? Just take a photo of the receipt. Tracking mileage is as simple as pushing a button. Meanwhile, Deductor is busy in the background, helping you capture all the federal deductions that those activities and expenses trigger. With powerful reporting features, Deductor gives you real-time, customized, and meaningful feedback on your tax situation. Now you can watch your tax deductions grow as your business grows. And best of all, you can share all of this powerful information, perfectly formatted for your tax preparer, with a single click. Listen, you work too hard to leave money on the table, and you're too busy to spend hours collecting old receipts and bank statements. So do what you do best, build your business, and let Deductor help you keep more of what you've earned. Time is money, so stop wasting time and losing money. Join Deductor now and find out how much you've been leaving on the table. Join now.
So any questions on that as well? Like I said, I'm not in business for Deductor, but I just think that's a really good tool to have. So any questions? Okay. So some other information would be, at this time we'll go ahead and work on an actual tax return, and this is where I'm definitely going to need your help. I like to use and recommend to other tax payers, if you're pretty savvy with doing your tax return. There's one that's out here by TurboTax. It's called Home and Business. Like I said, this is just a suggestion business tool. If you prefer filing your own tax return, Home and Business version made by TurboTax is a good one to purchase. They usually have them at Sam's and Walmart for less than $99 each year. I don't recommend purchasing it offline. My recommendation will actually purchase the CD version. That way, if something was to ever happen, you will have your CD each tax year to upload to your new computer, and you can always be able to access your information. And sometimes the internet is not always available with some of these different software companies. So again, another disclaimer, I do not work for TurboTax and will not earn a commission for suggesting this business tool. But again, if you're pretty computer savvy and already file your own tax return and have dabbled and dabbed in it a little bit, this is the one that I would recommend on your own. But there are plenty of great tax professionals that are out here that will be more than happy to do your return as well. So without further ado, we're going to go ahead and build a mock-up tax return together. Any questions from anyone on the line? Okay. We're going to go ahead and get started. Okay. So this is TurboTax Home and Business. We want to get started with TurboTax. And basically, you'll just go through the screens. I built something, kind of started with one, so we won't spend so much time. So I've already built the personal info, and I'm going to skip over business and go to personal. We're going to keep it simple. So we want to look at personal income. So for the most part, most people have a job, right? So now can you hear me okay? And Ashley, may need your help. So what I want to do is I'm going to choose what I want to work on. So these are different incomes. You have, as we talked about earlier, you have wages, you have salaries, you could possibly have some unemployment income, you can have some interest and dividends income, investments, here's the retirement plan, and then you may have some lottery winnings. The 1099 miscellaneous, that's when you're self-employed. So these are different options. But what I want to do when we build is I want to start simple as a employee. So we want to add a W-2. So we want to work on our W-2. And we want to, I'm just going to make up a number for our tax ID number. And we're just going to make up a name for our employer. And just make up an address. And we'll just make up a social. Okay. Like I already built the address, so that came over. So now we want to talk about our wages. So when you're filing your tax return, let's think about how much money we made. So we're going to be a single male with no children for this particular tax return. So how much money did we make for the year? Anyone? Give me a number.
$65,000.
65,000. Okay. So we're going to say we made 65,000 for the year. Now, according to the 2016 tax table, because the 2017 is not available at this time, but according to that table, if I was working and made $65,000, this tax table will show me how much money I should have had withheld from my check every pay period. So I want to go to 65,000. And as you see, here's the 65,000. Okay? At the very top, it shows us, here it is, if this is your income in this first section, okay? And then here's your filing status. You got single, married filing joint, married filing separate, head of household, okay? So we know we're single, so we're going to use that first column. So we're going to go back to 65,000. We're going to see that we should have had $12,028 withheld for the year. Do this happen a lot? That's based on you being single, which means you didn't claim anyone. When you completed that W-4, when you started your job or your withholdings, basically what that means is you said zero. I'm not claiming myself. I'm not claiming anyone else as far as exemptions. Exemptions are dependents, yourself or your children. So technically, I should have had $12,028 withheld from my check for the year. A lot of times this doesn't happen. A lot of times people, they file exemptions, 4 and 5 exemptions, which equates to 4 or 5 kids, or they'll file exempt and do not have this money withheld. So basically, being single and the only job that I have or the only income I have coming in is from my employer, which is my wages. So if I don't have this $12,000 withheld, I may owe in taxes because according to this, I owe $12,000. Does that make sense?
Yes.
Yes.
Okay. So we are going to put that $12,000. We're going to say we did pay our taxes equally on each paycheck. So we're going to put that $12,000 on our column, item row 2 for federal tax withheld. So we're going to claim that. We're going to say we did the right thing. You notice at the very top, do you see this at the top with the federal refund? It's showing me what my refund is already. And I'm not even finished. So my federal tax summary so far, with just what I put in, is showing that I'm getting my standard deduction for being single at $85.20. That's my deduction. And my tax for income, because my tax for income was reduced from that 65, it went down to that 52. Okay, and then it's showing now my tax is based on that 52, so my tax went down to 88. So 52,430, we could see that also again on this tax table. We said 52,480. You see that? That's where that tax comes from. So because my income went down from 65 to 52 because of my standard deduction, the IRS gave me a deduction for being single, a standard deduction. So also when you're filing your taxes, there's two different types of deduction. You have itemized and you have standard. Standard is where you don't have to have any receipts. The government is going to say, okay, just because you're single, I'm going to give you X amount of money for this tax year. Or if you married, filing joint, you have a spouse. That means you have someone to take care of. You may not have any kids, but you have a spouse to take care of. So I'm going to give you this amount for this year. Same thing with head of household. Head of household, you may have kids to take care of. You may have some parents or some qualifying relatives. So based on that, that makes you head of household. So I'm going to give you this amount of money for that tax year. And I'm saying that this and that because every tax year Congress gets together and say what the new tax rates are going to be, and they vary from year to year. So that's why I try to keep it generic. But just that quickly, my income went down from 65 to 52. You see that? Okay. So as we build this tax return out, I'm not going to worry about the Social Security and all that stuff. I just kind of wanted you to see how it's important to have money coming out of your payroll check for your federal taxes. Okay. And like I said, a lot of times, a lot of people cannot afford to have to file zero and have the max amount coming out of their check. So sometimes people do, play around with their exemptions. That's why I say a disclaimer would be every taxpayer situation is unique and very different. It just depends on what you have going on in your life, in your situation. Again, I'm going to leave these other blocks blank. You could receive a credit for having a retirement plan, and then the state, we're not going to worry about the state. Okay, so that's how we would put in the information for the wages. Okay, now we want to look at adding our business. So, say for instance, we did not have that amount of money withheld from our check, right? Or even if we did, we're okay. So we're already at the point where we're getting $3,100 back just because we did the right thing by taking out the max on our payroll check each pay period. Now, it's not wrong that you do anything less. Again, it's all about paying your share and what you're responsible for on your tax return, okay? So as long as you're able to pay your tax bill on time, whether you owe or get a refund, that's basically what it's about, okay? So again, so now we're going to go to a business tax return. So we want to start a business, okay? And we said that we had, for this example, we had a tax business, right? So, travel business. So we got a travel business. So we're going to say travel. And we're going to say we started in 2016. we're going to say we started that business around, I don't know, give me a date. Someone give me a date. When did you start your when did you start your travel business?
September.
September. So September 2016. Okay, so this is basically asking that we pay any employees. No, we did not. Do you have a tax ID number? No, we do not. And it's okay. It's okay when you have your home-based business your first 3 years to not have an EIN number. Basically, what an EIN number would do for you, you can use that to go to the bank and get a business account in your business name. It can help, and it's free that you can get through the IRS. But I just recommend in the beginning just use your social. There's nothing wrong with using your social. But if you want to go ahead and set up your EIN and establish your LLC, there's nothing wrong with that either. So you have that flexibility to do either or. So continue. We're not going to apply. Business codes. Business codes are where it helps categorize the type of business you have in the eyes of the IRS because they want to know, based on this business is actually doing pretty well in this area. So you want to look up your code and be able to categorize your business by the type of business that you have. So for travel, your code is going to be 561500. So that's the code for travel. But the IRS also have, here's their business code. So that's where I found the travel arrangements and reservation searches. So there's many, many others depending on the businesses. And I think I saw a question. No, it does not. Only thing about having an LLC as far as on your tax return is that whatever you paid to make your business an LLC, that's just more of a business expense that you can write off. An LLC is a limited liability company or corporation, and basically what it does is it legalizes you. Like if someone wanted to sue you, they'll sue your business and not you. It's basically what that would do for you. That is it. That's exactly what it would do for you. It's basically if someone wanted to sue you, they'll sue your business instead of your social or suing you personally. But you'll still file your tax return the same. You'll put that LLC on a Schedule C as a sole proprietor to file your tax return. And again, like I said, it's just your additional expenses that you can claim. So if someone charged you $400 to make your business an LLC, you'll write off $400 for that business expense. Was I able to answer your question? You're welcome. Okay. So next we have our business code. I'm going to go through some of these because this is getting more to preparing your tax. But again, using cash method, we're going to leave that as yes. Payments to on a 1099, we're going to say no. All right, so I'm just going to go through these. So I want to look at the different expenses that you can have for your business. So this is where, say, for instance, some people get caught up in, when they get their taxes done, when a tax preparer may say, well, if you didn't receive a 1099 miscellaneous form, you cannot claim that business. That's an incorrect statement. When you receive a 1099 miscellaneous form, that business or company or whoever that was that you earned an income from, they're legally liable to issue you a 1099 miscellaneous form if you made over $600. So say you went to work or you did some work for, Coca-Cola as a contractor, and you only made $300 from them. They're going to pay you, and so you're a contractor, they're going to pay you for that contract work got checked for $300. But during tax season, they do not have to issue you a 1099 for that $300 legally in the eyes of the IRS. Now, if you made $600 or $601, then yes, you will receive a 1099 miscellaneous form from that company because you made $600 or more from them. So when you hear someone say that you don't have a real business because you didn't make any money, that's not true. That you didn't make $600, that's not true. So the 1099 miscellaneous form is required by law for a company to issue you a 1099 when you make $600 or more. So I just wanted to point that out. And you also have the option to earn income by way of check. So again, say you're okay. So we're a travel business. This is the one we said we was going to work on. So say you rendered services from a chartered bus, right? And they paid you by check or paid it, through your credit card company. So that's called gross receipts. So that's where you're getting paid by check or where it has this 1099K. 1099K is where you're getting income paid by some type of card. So you'll get a form look similar to that 1099 miscellaneous form, but it's going to say 1099K. That means you got paid by a card company. It was a transaction that way. So again, so that's gross income. So you can have gross income and you can have miscellaneous forms or none or neither one. So in this case, we're going to go with the gross income. And we're going to say for the travel business, okay, we've been in the business since September. Have we made any money or not? Anyone?
Yes.
How much money did we make from our travel business?
$1,200.
$1,200, and we can say $1,200. We can say we only made $75. We can say we made $3. It doesn't matter. We can say we made $0, but we're going to say we made $1,200, right? So we're going to put in that $1,200. So if you notice, when I put in that $1,200, it reduced my refund. And do anyone want to guess why it reduced my refund?
Because of the amount that you sold, the amount that you made?
Correct, because that $1,200 increased my income. So you remember my income used to be 65 and it went down to that 52. But when I added that 12, you see it went back up to 53. And then if you notice, now my tax bill also went up. Remember, it was 88, now it's 93. So it doesn't matter where your income is coming from when it comes to preparing your taxes. It doesn't matter if your income is coming from a wage or your business. They both going to be added up together as one income. The goal is to bring that overall income down to a point where you're able to pay what you legally should pay on your tax return. Okay? So we're going to say we made $1,200, so we'll click continue. So that concludes our income portion of the business. So we got wages and we have business income, right? So now we want to look at our business expenses. So did we have any startup costs? So I'm going to say yes for startup costs. Basically what the startup cost is, say for instance, we did. So we started our business in September, right? But say we heard about our business before September, we attended some meetings, we even traveled overnight, we went to some conventions just to learn more about the business. Weren't quite sure we were ready to do it yet, right? But we wanted to learn more about the industry before we actually launched our business. So we can put our startup costs, and also once you start that business, once that business has officially been open to the public, that's where you can claim that expense or expenses prior to you starting your business. And you can claim up to $5,000 in startup costs. So basically, just for the purpose of this training, I'm just going to say the description is research and development. I'm just going to say research. Okay. And I'm going to say that I spent $3,250. $3,250 would include hotels, mileage, going to and from meetings, those things that I've done. Because I went to conventions, I've been to seminars, I've paid for those. So just adding up all those things I've done prior to launching that business, I can claim that because I did launch that business. And then I just put in the date. So if the date varies, I just put in the most recent date. So we're going to say a date in August prior to starting the business in September. Okay? Now, that's about the startup, but actually when I prepare a real return, startup costs actually would go in a section called other expenses on a line item, and you would name it startup costs, and that's where we'll put those 32 cents. Okay? So I'm going to delete this because I want to put it in the right place. But just to explain what the startup was about is what I was doing. Okay? All right, did you use a car or truck for your business? So, yes, we used our vehicle for our business, right? So we'll put in our make and model. Is there a time limit? So you want to look at the year. So you want to look at, so we started our business in September 2016. You want to go back up to $5,000. So if, say you've been doing research since December of 2015, you can look at adding that, but I would say in that calendar year, now that it's so far away from December. But say, for instance, you started your business in January of 2016, but you did all your research in 2015. So you would claim that research in 2015 because that's the tax return you was going to do in 2016, if that makes sense. So say, for instance, we're in 2017 now. So January 1 of 2017, I started my travel business. But I did my research in several months back, May, June, July, September, October of 2016. So I will go back in those months and tally up how much I spent because I'm still filing that tax return for that tax year. So I'm still filing that 2016 tax return. You're welcome. So our make and model. So what type of vehicle do we have? How about we'll just say a Honda. And we'll just say it's under $6,000. And we started using it the same day we launched our business, right? Oh, 16. We own our vehicle. So these are just a few questions we will answer. Yes, I tracked my miles because we use the Deductar or some online or mile app. So this is where you will enter your miles driven. So say we drove 12,000 for the year. Okay? And say half of those, 52.69 are for, or we can just keep it simple because I'm getting ready to do some math. 6,000 is for business, and then the rest is for commute or personal, right? So this is how you will use the standard mile. When your vehicle is in your personal name, you can only take standard mileage for your tax deductions or actual. You only can take one or the other. If your vehicle is in your company name, then you can write off 100% of that vehicle. So if you have miles or gas, tire repairs, any of those things, so you get to claim both. Let me hit continue. If you notice, now my refund went back up. Reason being because I got 53.5 cents per mile that I just claimed for those 6,000 miles. Now, this is where I have the option. So here it is. It shows my standard mileage deduction. It gave me $32.40 for my standard miles. Now, I can switch it to actual just to see if it gives me a bigger difference. But more than likely, if you have a newer model vehicle, you didn't have a lot of repairs. especially if it's in your name. So your biggest deduction would more than likely be your mileage. So I'm going to stick with my mileage. But you also still get to claim parking fees or tolls. So if you go somewhere and you have to pay for tolls, you get to claim those now. So I know in D.C., when I was traveling around in D.C., there's a lot of tolls. So being self-employed, keep in mind, even though you may be headed towards your job, but if you're talking business on your phone or you're doing your personal development podcasts and trainings while you're in commute, those are no longer commute miles to work. Those are business miles. So, and also you're going to be talking to a potential client where you're going, right? So you can claim those tolls as a tax deduction if that's what you're doing. But if you're not, discussing business, then I wouldn't claim that. Does that make sense?
Yep.
Okay. So we'll say we spent about $35 in tolls. Okay. So that's my vehicle deduction. Now here's those others that we talked about earlier. Your advertising. So advertising, say your hosting fee is $79.95 a month, and we paid it September. Well, actually September you probably paid for your startup for your business, right? So how much was that? Can someone tell me what did you pay to start your business? So if I paid $174.95 to start my business, I would be able to write that off. Okay. Also, those $79.95 that you paid for the remaining months, so you had 3 months plus $174.95 to start your business. So you're looking at about $414.80 for your business for those few months. Okay? So that's what we would put that. So when I put in that $415, my refund, if you notice, is steady going up because my income is steady going down. So my income went from $65 down to $49,940. All right. I also purchased some business cards. So I spent about $120 on business cards. I got someone building me a website. Well, actually, I'm not even going to worry about a website, but I did business cards and hosting fees. I'll leave it at that. Keep it simple. So that's under advertising. Business travel. So I went to a national convention, right? And it cost me my airline, my Lyft or Uber ride to and from the airport, my hotel stay. Say that trip cost me $1,750. So I'm writing off $1,750. And you see how this is working? My income is steady coming down because I'm taking the money that I've earned on my job and I reinvested it into my business. So I'm entitled to those deductions. Okay? Say I went to some business opportunity meetings. And say it's $10 every time I go, and I go 4 times a month, and I've been in the business for 4 months, right? So I got 4 times 4, and it's 16 weeks. So I'm looking at $64 every time I pay the $10 for a business meeting. Okay? So those are some things that you can keep in mind for your business travel. And say I paid this when I went to a meeting. Let's see, what else? Because I traveled to these locations, okay? So it costed me these expenses. Or I can actually put this in a different category. And I think that's what I'm going to do. So this is travel. I'm going to put that somewhere else. So as you can see in this section, you have air, train, you got your hotel, rental car, taxi. So this is where all that's going to go, okay? Well, I can do Lyft. I can say I used a Lyft while I was away in travel. So say I spent about $50 doing that. Okay? Again, you have some of these other ones. You got supplies, utilities. Here's where you will put your utilities based on your expenses. Other expenses, this is where we can put the business opportunity meetings that we spent $64 on those. Some other expenses, like it has shipping and postage, the ATM fees. So say you made some money through your business, or you need to pull money out, ATM fees. So you can deduct those as well. Again, all this is going to be different based on your situation. Again, every taxpayer situation is unique and very different. Anyone have any others they want me to take a look at? You got supplies, you got repairs and maintenance. Again, if you have any of these, the LLC, legal professional, so say you pay for your LLC, you pay $400 for that, so we'll claim that as well. So again, you see what it's doing is continually bringing down my income. So I've gone from 65 to 47. Okay. So just to look at that, so we're going to just look at the tax return real quick. So let me pull up the actual tax return. So here it is. It has my basic information here showing that I'm single. I have one exemption, which is myself. I made $65,000 for the year. Okay. All right. Based on my income from my business, I took a loss of $4,912. Okay. So what it did, it made it negative. So that $4,912 is being subtracted from my $65,000, bringing down my income to $60,088. So this is your income section. Okay, so on my next page of my 1040, it shows my adjusted gross income at $60,088. Remember, I get my itemized deduction or standard deduction. Okay, I chose standard, which means being single, my deduction is $6,300. So these are your standard deductions where you don't have to have receipts. Itemized, you have to have receipts for charitable deductions and all that great stuff. Okay, so we're going to go with the standard deduction. It brings my income down to $51,568. My exemption is going to be $4,050 for myself. Again, if I had children to claim or spouse to claim, this would be that $4,050 times however many numbers that I have, right? So now my income is down to $47,518. And now we go to the tax table for the $47,518. If we go to that tax table that we've been looking at earlier, you will see that my tax is now $7,650 from that $12,028 that I had withheld for the entire year. Okay, so let's just bring it down all the way down. Now we see here's our federal income withheld. Remember, we had $12,000 taken out of our check every time we got paid. So, but this is our tax bill now. So in the beginning, we actually owed this $12,000, but now because of all of our deduction in our business, we don't have to pay that $12,000 anymore. So we actually going to pay this $76.53, and the IRS is going to owe us $4,375. Does that make sense to everyone?
Yes.
Okay. And just to show you what the Schedule C looks like, this is what we built for our travel business. We said we use cash. We only made $12,000. So part one is based on the income. We only made $1,200 from our business. But we had advertising expense in part two was $535. We had our vehicle expense was $32.75. Our meals and travel expense was $1,800. And we had some other expenses, right? That was $102. So technically our overall expenses was $6,112. But remember, we made $1,200. So you subtract the 12 from the 61, which means we took a loss from our business, which was the $49.12. And it's okay to have a loss. You're just starting out, right? It costs money to run your business. So you took a business loss of $49.12. Remember, in the eyes of the IRS, it's the intent of making a profit. So we went into business with these expenses with the intent of making a profit, right? So we can legally write off this $49.12, which we did on our 1040 under income. So that $49.12 carried over to our 1040 under income for our business income or loss. That's why it has loss in parentheses. You get to claim that as income. So any questions on building how your tax return will work for you when you incorporate your business? Okay, so that was our mock-up tax return. Like I said before, this is just a disclaimer. This has been an example of how applying business expenses work. Each taxpayer situation is unique. You would definitely want to seek a tax professional for consultation or preparation of your taxes. These are just a few references, and this is my information. Thank you for participating in this tax webinar with me. If you have any questions afterwards, just let me know. Again, this is my information that's on the screen. And just to close us out, I just want to point out one last thing. This is a picture I have on the screen here. It says, see the toll for vehicles, $3, and then free bypass, 1 mile, right? So at the bottom it says, to the left, it says, if I went over the toll bridge and through the barrier without paying the toll, I would be committing tax evasion. To the right it says, if, however, I drive the extra mile, I am using a legitimate, logical, and suitable method of tax avoidance. Basically what that means is if you drive or go that extra mile, use the business tools that you have available, track your income and expenses, you will be avoiding certain tax legitimately on your tax return that you can claim. But if you didn't keep up with your income and your expenses, and you just don't do what you're supposed to do, then yes, that's considered as tax evasion. And that's when the IRS do come looking for you, asking for the additional tax that you owe. So again, I just wanted to close with that. If you have any other questions or you have anything for me, you think of anything later, just let me know. But and I appreciate you dialing in and being interactive during this session. Any other questions or comments? Thank you, Ashley. Thank you so much. Again, you guys have a great day, and I will have more of these sessions coming soon. Have a great day.